Hello, I'm Scott Duxbury and welcome to Nucleus195 Pro Insights. Today we're lucky enough to have from KASB Securities, Managing Director Ali Khawaja, and he's going to talk about his firm and the Pakistan market. Welcome, Ali.
Thank you, Scott. Good morning to you.
Good morning to you as well. First of all, can you give us a bit of background on yourself, and where you've come from and like what you've covered in the past?
Certainly. So I run KASB. It's a brokerage in Pakistan. I'm based in the London office. And prior to that, I was a partner at Autonomous Research, where I covered fintech. And before that, for the last 15 years, I've covered tech in general, but fintech in particular at UBS in Berenberg. And in between, I was also CFO of SafeCharge, which is a global payment company listed on London Stock Exchange.
Great. And can you tell us a bit more about KASB Securities? Like obviously well known in Pakistan, but like outside of Pakistan, people would like to know a bit more about them.
Absolutely. No, it's a new investment bank with the old pedigree, which I launched last year. So we went into operations in April 2018. It's a full-service investment bank with research, sales, trading, and execution capabilities. So we are trading right member of the Pakistan Stock Exchange. Our clients are institutional, global institutional funds, domestic asset managers, banks, insurance companies, high net worth investors, and even retail clients who use our app to trade on the stock market.
Great. Now, you also recently had an announcement that UK asset manager Sturgeon Capital signed a partnership with KASB. Congratulations on that. But also, what does this partnership mean for KASB Securities?
So Scott, let me give you a slight background. As I told you, I've covered tech throughout my career. I've worked in top-ranked firms, and I've also worked within the tech sector where I've done M&A in companies from Singapore to Germany to the US. And for me, the reason why we restarted KASB was that Pakistan seemed like the most interesting investment opportunity which I've ever come across, especially in the digital sector. The interesting thing was that the market is it's a small market. It's a part of an MSCI Emerging Markets Index, where it has a 0.1% weight. So it's inconsequential from that perspective. But where it gets really interesting is the growth in tech and the growth in digitalization. So to give you some numbers, right now there are 61 million people who have mobile internet, which is greater than the population of Canada. And 3 years ago, this was less than 1 million. So almost every month, there's an increase of 1 million people on mobile internet. So it's the fastest growing market for digital inclusion. Right now, Facebook has 45 million users. And if you add all the bank account holders in the market, that's 22 million. So there's a transformation which is happening, and all of this is very recent. So over the past 12 months, Alibaba has entered, and Financial made an acquisition, and 2 weeks ago, Uber acquired the local clone of Uber called Careem for $3.1 billion. So suddenly there's a massive change in the economy which is happening because of this structural shift towards digitalization. But the local, my competitors, the local brokers, as well as the global funds, I thought were missing this. And that's why we started KASB Securities to look at things in a different way. So Sturgeon Capital is an emerging markets asset manager based in London. They focus on markets which are on the Silk Road. So Pakistan is a big part of China's Belt and Road plan, and they have decided to invest in Pakistan. And as a part of that investment, they've taken a small stake in our company, primarily to help them get some feet on the ground. It's a minority stake. But what is more exciting is that investors have started to look at this market, which I thought was massively undercovered and poorly covered and ignored by most global funds.
Okay, thanks for that. That's very insightful. There's a lot of growth obviously happening there. You recently had a very popular report on the Nucleus195 system about who owns Pakistan. For those who haven't seen it, can you give a brief summary on that?
Certainly. So what we focused in that report was to focus on corporate governance and to focus on the structure and ownership structures of listed companies. I've been a fund manager and as an analyst looking at companies around the world, and I think the most important factor for investors who are looking at such markets is who owns the company. So the management, the corporate governance, the ownership structure, and often what's ignored in emerging markets such as Pakistan is the cross linkages between companies. So what we did was there are 600 companies listed on Pakistan Stock Exchange. Overall market cap is around $70 billion, odd, and so around $70 billion. And our research showed that there are 16 groups, families, who control 42% of the total market cap. So it's highly concentrated among 16 groups. The top three control around 15%. So the pyramid gets even much more concentrated right at the top. So I thought that was interesting, that instead of looking at what we were telling investors was that instead of just looking at companies per se, you should look at them as these conglomerates which are part of different families who have controlling shareholding in those businesses. So that was one aspect of the analysis. The second aspect was that we also tracked things like female representation on the board. So our research found that of the 100 companies we looked at, 42% had at least one female member on the board, and 10% had more than one. Often this representation was for token, as in there were people, the ladies were linked with the families, but nevertheless, at least for 11%, there were more than one woman on the board. That was another analysis we did. The third thing which we did in the report we did was that we tracked the performance of these businesses. So over the last 12 months and over the last 5 years. And what we saw was that, and this was interesting, that there has been a regime change in Pakistan. There's a new government which came 12 months, almost 10 months ago. And in this period, only two groups have outperformed the market. And only one of them have generated a positive return. All the rest, the 15 other family group companies, are massively underperformed. And I don't make an explicit link in the report because it's slightly sensitive, but you can draw some political conclusions from that, because I think that there could be a backlash against the government because these 15 families are very powerful. They control significant portion of the market cap of the Pakistan Stock Exchange, and their companies, the value of their companies is down 20 to 40%. So they won't be sitting too happy right now with the current government, and there might be an impact of that on the political side going forward.
Okay. At the start of the year, you said with oil staying at $55 or less, you could see the Pakistan market rally 25 to 30% in 2019. With oil in the mid-60s now, where do you see the Pakistan market finishing for 2019?
So that's a great question, Scott, and it's a difficult question because essentially oil is central to a lot of the disequilibrium which has happened in the economy. So the Pakistan's stock market has been in a bear run for the last 2 years, and the economy has facing this disequilibrium in things like current account deficit, fiscal deficit, rising inflation, which has and oil plays a central role in that. So Pakistan is a net importer of oil. It's not like Middle Eastern countries which produce oil, and Pakistan generally is a net importer. So 35% of the total import bill is driven by oil. When oil prices go up and imports go up even more, that put pressure on the current account deficit, on the balance of payment. And secondly, the inflation basket also gets linked with international oil prices. So my view with the report which I wrote at the start of the year was that if oil stays in that level of 50 to 60, the report said 55, then that's actually a very comfortable level because it actually brings back a lot of things into equilibrium. If it goes above 65 to 70 range, then that's a red flag. So right now, it's not at 55, it's at 60, but it's not at 70. So right now it's at a level which is not uncomfortable, but it's I suppose an equilibrium level. oil prices remain low, then that gives the government a lot of bandwidth to fix the balance of payment situation. The latest update on that is that right now the finance minister of Pakistan is in Washington DC, and they're about to negotiate a program with the IMF. So all the focus and all the market's attention is actually on that, because once you enter the IMF program, then economic policy will be driven by the recommendations given by the IMF.
Okay. So also obviously a tough time earlier in the year with the India-Pakistan conflicts and so forth. Like, did that have an impact on your forecasts for that?
No, so this is a problem which has been going on for the last 65 years, right? So
Yeah.
the market, investors, and people generally have become a bit immune to that. So what we saw was that, and it's kind of strange, because both the countries, the nuclear power, they were close to, and of course, it could have been catastrophic for the world. But Indian market was down less than 3%, Pakistan market was down less than 4%, even during the time when this was happening. And similarly, the market on the bond side, if you look at CDS spreads or the yields, they didn't react that much. Having said that, there are elections in India right now as we speak. Today is the day one of it. Pakistan's Prime Minister Imran Khan has said that whoever comes to power next, and he thinks that it might be BJP, Pakistan wants to talk about peace. I wrote in my start of the year report that I think that Pakistan and the new government sincerely wants peace with India. It's a major, I think it's high up on their priority. And Pakistan, the government showed that during the recent conflict with India, where they were always seeking restraint, and they returned the Indian pilot, which was held by Pakistan, within 2 days. So I think that I'm hopeful that there will be a major initiative for peace next year when the new government in India comes, so in the second half of this year. And if that, and I think right now both the governments have the best chance for seeking peace. And if it's resolved, then there will be massive dividends, because this is a problem which has been lingering on for the last 60 plus years.
Now, also staying on that topic, what reaction did you see from international investors on the back of that conflict?
Generally, I think they're immune to it as well, because they've seen it many times in the past. So there was they're investors and they're investors. So it's difficult to generalize. But of course, there are people who are concerned. But looking at historical track record and historical precedents, they knew that in the past, when such incidents have happened, they have been resolved and they've never blown out to something bigger. So generally, I think the investors and the market was expecting that eventually the US will intervene, and global powers such as China and the European community will intervene and try to play a backdoor negotiator role, which eventually they did, and resolve the issue. So the market's reaction was not extreme at all. It was very muted.
Okay. Now, obviously, we have a global audience with this, and Pakistan moving from a frontier to emerging market status 18 months ago, roughly. How easy is it for international investors to invest in Pakistan names?
Oh, it's very easy. There are no restrictions, and investors can put in money in and take money out. There are no capital controls. Around 10% of the stock of investment on the exchange is held by foreign funds, and around 30% of daily traded volumes is by global asset managers. So it's fairly easy. It's easier than other markets such as, let's say, India.
Okay. And finally, last question for you. What is your top pick for the rest of the year? Now, it can be a bull pick, it could be a bear pick. What's your top pick for the rest of the year?
So I'm bullish on the market. I like the banking sector. I like companies. I like companies which have a strong balance sheet. You have to look at the valuation. So, right now, Pakistan market is trading at 7 times PE, for 12 months forward PE, and the dividend yields at 8%. So, if you had to ask me one stock, I'd probably say Engro. It's a part of that conglomerate which I wrote about in my report, which which is the only conglomerate which outperformed over the last 12 months and also over the last 5 years. It's also part of the conglomerate which also has the highest female representation on board. And it has a very strong balance sheet. I think around 30% of market cap is in cash. So that would probably be my topic, but generally I like banks and a few well-managed companies which have exposure to the consumer sector.
Great. Well, Ali, thank you so much for your time today and your insights as well. Learned a lot more about the Pakistan market. As a reminder to everyone out there, KASB Securities research is available at Nucleus195.com. It's free to sign up, and you can find investment research like KASB Securities and other providers from all around the world. Until next time, I'm Scott Duxbury, and thanks for watching Nucleus 195 Pro Insights.